Hey guys, Alexis here with SPT. Hope your week is off to a great start. As we make our way through the second quarter of the year, I wanted to check in with you to make sure you're prioritizing your trading mindset and strategies. So let's go over the top 3 trading psychology lessons you need to use in 2023. Number 1, mindfulness in the market. Number 2, adaptability in dynamic markets. And number 3, taking time off. So let's start with staying mindful of the market. If you're a trader or investor with less than 10 years of experience, 2022 may have come as a surprise. It marked the end of a prolonged period of low inflation and interest rates, along with supportive central bank policies, which favored those who held onto risk assets. It's time to prepare for a change in strategy and mindset for the rest of 2023. However, as central banks reversed their monetary policies by quickly raising interest rates to combat high inflation, holding onto these risk assets like tech stocks, cryptocurrencies, and commodities resulted in significant losses. While there were a few exceptions, the market was largely affected, and even bonds, despite growing concerns about a global recession, were impacted due to the overarching theme of rising interest rates. It's important to keep in mind for 2023 that this type of scenario doesn't occur frequently, but 2022 serves as a reminder to stay attuned to larger market themes, exercise caution when attempting to predict market tops or bottoms, and be mindful of your recent experiences, as history doesn't always repeat itself. In other words, buying low may not always be the best strategy. Now on to adaptability. If you were among those who anticipated the tightening of monetary policies, or saw the impact of the Ukraine war on inflation rates and food supplies, or recognized the potential monetary policy differences between strong and weak economies in 2022, then congratulations, and we hope you were able to profit from those predictions. However, if you didn't take action, it's important to ask yourself why. Were you not paying attention? Was your strategy not in line with the market environment? Or was the uncertainty surrounding potential shifts in the financial markets too high for you to act or change your biases? Answering these questions is crucial in overcoming psychological hurdles that can hinder your decision making. Common obstacles like FOMO, fear of missing out, or holding on to a loss can freeze your ability to act, as seen when the USD JPY rallied by 30%, or when crypto saw a 60% collapse in 2022. The key to reducing the negative psychological effects of trading is to do your research, prepare plans for different scenarios, and limit your risk. And if you haven't done these things yet, it's okay to wait and trade another day. There will always be new opportunities waiting for you this year once you've done the necessary preparation. Lastly, know when to take some time off. You need to stay alert to market drivers, analyze market movements, prepare for various scenarios, and endure the psychological challenges that come with changes in the market and shifts in your profit losses. For many, this can be both mentally and physically draining, not to mention the added stress from other life demands such as family responsibilities and other pursuits. A tired mind and body will negatively impact your ability to focus and make sound decisions when managing risks. That's when it's necessary to reduce risk or close positions and take a break from the markets. As renowned trading psychologist Dr. Brett Steenberger says, by acknowledging burnout as a potential hazard, traders can take a proactive approach by keeping expectations realistic and taking ample time away from work to encourage in activities they enjoy and have control over. To avoid feeling overwhelmed or burnt out, try to incorporate regular, comprehensive breaks, such as once a quarter or during market slowdowns, into your trading process. While it may be challenging for hardcore traders who can't stop thinking about trades even on the weekends, taking time off can lead to better performance, much like how athletes recover from fatigue and injury after a week or 2 of rest. Try a Smart Prop Trader challenge. Choose the SPT account size that perfectly suits your trading style and needs. SPT accounts have no restrictions on holding positions over the weekend or trading during macroeconomic news releases. Now, I have some exciting news. Sticking around to watch the full video has its perks because guess what? Right now we are offering 50% off all 10K challenge accounts. Yes, you heard that right, 50% off. Use code Discord10K and be sure to follow along on Instagram to stay up to date on how long this promo will last. As always, subscribe to our channel and follow on all social media at Smart Prop Trader. See ya!